Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Yeah, welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen, and every week, same time, same place. Thanks for joining today for another episode of Cycles TV at the Foundation for the Study of Cycles. I'm live today, so I see you joining the chat. Trading Queen, Andrea, thanks for joining live. As always, you will have a chance to ask your questions live in today's session. So what are we talking today? Today, I think it's time to give an update on the US stock markets. I mean, when will the bubble burst? That's the question everyone tries to answer. So let's try to find some answers out of cycle analysis. You might remember that due to the time, I think in November it was, I showed you that a huge upswing cycle has now started or has been confirmed. I will review that quick analysis and update you to today's situation with this long-term cycle, and then for short also checking in on the short-term cycles. So that's the key topic for today. How long will this rally continue? When might it end? So let's try to find an answer with cycle analysis. So we jump to our cycle analysis chart, and I always recommend let's start with a long-term weekly analysis. So I have pulled up the weekly S&P 500. Which is seen here with the trading now around the S&P 500 around these 5,100 something. So we have reached that all-time high here since these huge rallies started end of October last year. So that upswing is one of the most dominant upswings here. So if we have a look at the spectrum now all together, what's really popping up here, and that's quite an important and interesting cycle, we can spot this on the spectrum chart here, which has a length of 178 weeks. We're talking about weekly cycles here, and this is just the standard setting, so I'm even not doing any long-term analysis. You will find this here when we have this view on using 850 bars, which is the standard setting. So if you don't have any clue how to adjust the data taken into account, it will take in that case here 850 weeks, which then brings us back to the year of 2007. So that's the amount of data used. And by just using this current period of data, you will see, and there's no discussion why to pick that cycle. If you just have a basic look at the spectrum, that's the key long-term weekly peak, which is popping up. So to the left in the spectrum, to the right, there is no peak, which could lead us to another cycle to pick here. The main point here is if you are a long-term cycles researcher on the US stock markets, you might have in mind that the 178-week cycle, or let's call it a nominal 180 weeks cycle on average, equals approximately, if you bring this up to months, around 41 months. So you could also argue the 180-week cycle equals to a 42 months cycle. And that specific cycle has a very long-term historical relationship in the US stock markets, even dating back over 200 years in historical cycle analysis. So we not only know from the current analysis, so using the past, let's say 13 years of data from the S&P 500, which reveals the 180 weeks, 41-month cycle as shown in the spectrum. The 41-month cycle is a very, very long-term important cycle for financial US stocks, which has been detected by Dewey. We will publish the original book from Dewey. I will push a special episode on that later, but there's a long-term relation to that cycle. I will get back to that later, and I've often shown you that long-term cycle. So let's get back to the chart now and see what we can make out of that. So, I mean, all the other data, if you look at the spectrum, we have here the a very strong Barthel score. I mean, that's, we could assume that's part of the story. If that has a long-term statistical significance, it would also show up with the high Barthel score. It's listed here as from the top, as the top 3 in regards to the strength. Strength has a relation to the impact on price movements. So this cycle has a strong impact on the price movements we see on the chart and has a huge amplitude. So, and even the visual shape in the spectrum is close to perfect. So there's no wonder why even our artificial or co-pilot in using cycles would always recommend use that cycle as key cycle here. So that's the starting point. We put that cycle on our chart, which shows us we are, and there are now different topics to take about. But first, the general reading is now we are approaching, or we have passed the midpoint, which are now approaching into the top, but there should be room to go just looking at this individual cycle, which if we just look at this cycle, which keeps moving upwards into October, September, October, November is really the final window for that cycle here, which where I'm currently now. But that's the simplistic view of that as a perfect cycle. And I mean, you've seen that even the bottom came in earlier as expected. So I was tricked a little bit last year, where I was expecting a double bottom here at that point. I mean, we got that, but it was a much higher bottom here at the right side to that chart, and that's interesting. It's just, by the way, it's very symmetric here, that bottom and that bottom here. So I mean, there is a strong uptrend. But anyhow, so as we have, and the reason we have seen confirmation that this upswing cycle is in force was also based on the concept of future line of demarcation, which, let's bring that concept in now to plot the FLD, so future line of demarcation. It's nothing more than just shifting the price forward by half of that dominant cycle length. So if we're talking about a dominant cycle of 180, we adjust the FLD shift forward, just give it an average of 90 weeks into the future. So this is the green line here. And the point when I updated you about that happening, and I've also updated that information here live on that channel, this happened early November. So early November, we pushed from below the FLD to the upside. And once this happens, these are important points in time which we really need to take into consideration. And that was the point when we discussed here that this long-term upswing cycle is in force, with then a lot of follow-up momentum following after that in November. So I think we have been quite right with that. So now the question is, how long will this cycle continue? And by using the FLD, you always know that helps us also to pull up some price projections. So let's do that. The way how to derive price projections is Let's zoom in a little bit before I will do this here. So the point to bring in price projections is we measure the distance of price traveled from the point of the crossing to the latest bottom, which is here. And then we assume that the same amount will be traveled by the final upswing, which needs to be completed. So we can just measure that by going from this point here back to the point in time when we had the low. You see here in the highlighted area, we're talking about 70 or 780 points, or what's even more important when we deal with this long-term analysis, 22%. So we price traveled 22% from the past low to the crossing, and that would assume that we would expect the same amount from that point now to move to the upside. So, and you can do the math. If we are here at 4,300, now you can calculate 22% are around, let's say 1,000 S&P points on average would bring us to a price target of approximately 5,200, 5,300 in the S&P 500. So the price target, which we could derive using this simplified technique here on the on this FLD, is somewhere around that level here. Yeah, so the upward projection from that price swing is around 5,300 approximately here at this level. So we are close to that. We're close to that. We did not arrive at that point, but we are now close to that. And that's why I think we need now to pay close attention as we reach these final tops. So timing wise, we still have some time left. Price wise, we are close to that period now. So there's some room for this bullish momentum to continue, but it seems like we are close to approaching the topping window. Now to fine-tune that, we bring in technical indicators on top of that. As I always recommend, one is the cyclic tuned RSI using the selected dominant cycle. So let's bring in this indicator. It's shown here at the bottom of the chart, and you see which gave us tuning to that configuration. It triggered the bullish signal here. Yeah, first here, so even that first upswing, so it was triggered this bottom period, or let's even label that. So it was triggered first time here, then that was close here, and then finally, again here. So more or less that was the entry level here, here, and here, where the cyclic RSI gave us that long-term bottom, or the next upswing should start. So, and since then, or at least since April, we took off and just continued to rise higher, and the technical indicator is also here on the way up. So I would give it some more room, and there now everything more or less seems to align. So price-wise, time-wise, indicator-wise, there is some room to the upside left before that final upswing, I think, will conclude. So that's a good confirmation, or at least a good alignment of technical situation, price targets using the FLD, and this long-term time cycle. So I think maybe into the US elections, this bullish momentum seems to continue. That's the long-term cycle, which now I would guide you pay attention once we reach the goal of 5,200 to 5,300, because then we have reached the price target for that upswing cycle. And then the time comes into play. But there is something I need to bring also to your attention. And that's, I think, why the market is really not in a stable condition. And I try to explain this now. And this is also the concept of cyclic energy, which sums up the different activity or different influences of different cycles. If you want to have a different view, not just on one cycle, which was the 180 weeks, if you take into account that there are even more than just one cycle on the chart. Okay, let's simplify the picture here. And maybe you have asked yourself, or you know anyhow already, what this individual colors, which if you look into this list here, so the length information is also the background of the cycle length is colored either in green, red, or yellow, orange. And this means that the cycle is either in an upswing phase, green, in a downswing phase, red, or close to changing the cyclic direction. So the 141 is close to topping, which then will change the direction. So it's at a turning point. So if it's amber, that cycle is from a time perspective at a specific turning point. And the color is always related to the current point in time. What's now interesting, we can go back in time. So if I just move the cursor back in time and then stop for a moment, you see that the color indication, the background of these cycles, switches the color, which gives you the phasing information at that specific point in time. So you can, it's like a time travel. So you can travel into the past by just moving the cursor into the past, and then at any given moment check what the phase of the individual cycles is. And that's an interesting different view on the combination of cycles. And very often you just look at these kind of composite plots here, and then you just try to find these turning points, and then you use that to derive timing indications. But there's also a different view on doing that. So let's assume here I'm now in October in the year of 2020. And you see at that point in time, these cycles, or the majority of these cycles, have all been labeled in green, which means that even if you don't know which cycle at that given point in time might be dominant, because that's always not easy to decide which cycle to pick to do my current projection. And if you're unsure about picking one specific cycle, we can then have just a look on all possible cycles, which is the list at the right. And then just from a visual perspective, a very quick check at any given point in time, what is the majority of the cycle phase, so the direction of these cycles at that point in time, so where the yellow cursor is, that was October 2020. And you see at that given point in time, most of the cycles showed us that they are in their positive upswing phase. So you could assume, okay, I don't know which one to pick, but most cycles anyhow indicate that most, and that's called what I call most of that cyclic energy is pointing to the upside at that given point in time. So it's not crucial to really identify that specific single and only cycle, which might be important. These change anyhow over time. So you can just do an average, what's the average phasing of each cycles, which give you a clue on what's the current trend. It will not give you a clue when might be the next turning point. Therefore, you need the dominant cycle. But if you just want to get a clue, okay, what's the underlying momentum at that given point in time, it's more green than red. So, and you see a long upward push even followed. And if you go closer to the to the top here of, for example, that point, and you see that the cycle phases now change, and at the topping period you see that more and more red is coming into play, and the green ones are getting out here at the topping point in December 2021. So that's the principle. I think, or I hope you understood. So now let's move. What does this mean for today? So let's now switch to today's situation, and this is how the phasing information of most of these cycles look. And maybe now you realize what I want to send out as a warning here, because most of the other cycles, besides the 178, which is still pointing upward, are in their downward phase. Yeah, so it seems like this single individual cycle, which is important. I mean, no clue. We analyzed it, we discussed it. This is still in this upswing phase, but you see that most of the other cycles have rolled over already to their downswing phase. There are just a few which are still pointing up, but all other ones, so all shorter cycles, or even a very long-term cycle here, it's not quite dominant, has rolled over to the downside. And this makes, or at least this brings me into a kind of attention mode that we should not just trust that single cycle, because the cyclic underlying rhythm is maybe close to a change here. So latest when that dominant cycle rolls over, the other ones have already rolled over, which also is an indication that market is not in a stable situation, because we have most of the cycles rolled over to the downswing, but there seems still one very dominant cycle keeping that market up here. That's not a good condition, so be careful on that. And the way to visualize that is just cross-checking this phasing or momentum score. We call that cyclic energy, and we can also visualize that by this energy model. I will just clean up a little bit the chart here. So therefore, that's what I said, just picking the 178 cycle here, and this is indicated. Just pay attention to the green and red bars here, not this blue line here, ignore that blue line. This 178 cycle, so it starts with today, so the first bar is today. So it's not the time axis is not aligned between the upper and the lower chart, so that yet you need to differentiate that. So the starting point here is always today, and you see that this single cycle still has positive green colored bars here going into even, and then it ends November, December, when this cycle switches and kicks in a lot of negative energy into the market here. But now, and that's the point here, now let's add up at least the dominant cycles which are identified by our co-pilot here. So I've now just added 1, 2, 3, 4, just using 4 dominant cycles. And you see now how the picture changes here. So what is to be expected? We just have very, very little positive energy left just from that single cycle with the length of 178 weeks. And even that cycle fades out at single cycle in November. But even the other cycles overrule that long-term cycle, which will then kick in negative energy now starting in May. So in May, all these smaller cycles, or the energy or the downward phase these other cycles are in, overweights the upswing of this dominant upswing cycle of just 178 weeks, which means even though we have room to the upside price-wise and time-wise, from a timing perspective, taking into account now the combination of the dominant cycles, I think timing-wise, the window might close already now in May, when there is more negative bearish energy from the cycles for the markets left and no positive momentum anymore. So this would then conclude, so if we see the price action reaching 5,200, 5,300 in the S&P, maybe now during the next 3 months, April, May, so then timing-wise, that would conclude, or with these negative energy of all these cycles coming into play already in May, overruling this single dominant cycle. And then we need to check when the cyclic RSI starts to turn down above the upper band. So that's then the trigger when maybe really the downward phase kicks in. So I hope I've not been too complicated in explaining that cycle, but I think the combination of these models is now very important, starting with the 41-month cycle, then having a look at the FLD, what might give us a price projection when this upswing might end. I showed you that indication. And then from the technical indicator, we need the confirmation from the price cyclic RSI, but there's also some room left. And then I think timing-wise, I've shown you that between May and November, that's the timing window when the tide turns in the long-term cycle. So I will leave it up to you now to switch to the daily chart and do a short-term analysis. I think that's the picture you should set into context when dealing with your short-term analysis on specific assets. So now let me focus on some of your questions to try to give you some answers. And if you're late to the show, feel free to bring in your questions now, because for the next 5 to 10 minutes, I will really be able to get back to you live here in that session. So, RB Jones, your question is related to the cyclic RSI and how this is derived. So can the cycle lengths of the RSI indicator be manually adjusted, or is it always set automatically? In the platform we are using here, it is set automatically when you activate it, and you cannot manually override it. I mean, it's a good idea, but you know that it's shown here and depends on the cycle you have selected. So 118, it's due to the fact you have selected that. So in the simple implementation we have here, it's automatically selected, not being able to override. But I will take it into consideration, maybe just to have a click here on the length at the manual override. So thanks for mentioning that, Abi. I will take it into consideration. Related to the dots between the cycle lengths. Yeah, let's have a quick view on these dots. So for example, here we have one, so you're talking about this 141 week cycles, which has a red dot besides the length. So let's just select that cycle to tell you or to explain you what it means. So the color orange means this cycle is close to a cyclic turning point. Orange does not show you if this cycle is topping or bottoming. Orange means, attention, this cycle will turn shortly. That's the orange. The dot now gives you the information what kind of turn is expected. So, and I think on the left side you can already identify that means this cycle is close to turn. That's the distance to the turn. So we are now in that, what I call the topping window of that cycle. That's why it is orange. And the red dot in the upper red corner indicates this cycle will turn to the downswing. So this is a cycle top which is occurring. So the dot shows you if this will be a top or a bottom. If this is a green indicator, Or do we have a green? Yeah, we have a green here. This 19, a very short-term cycle. Here we have a green dot. Let's also switch to that cycle. And then I think you might understand it. So this is a very short-term cycle, but just to explain the topic here. So here we also have an orange color and now a green dot here. And now let's switch to the screen here. You see that it is orange because we are close to a turning point of that cycle. So we are in the window of opportunity, or in the window where that cycle now changes its direction. That's just what orange says. Orange does not give us a clue what direction, but we know from the visual shape this cycle is changing to the upside, and that's what the green dot here indicates. So we know that the 19-week cycle is close to forming a bottom here. So that's if you just have a look at the table without the visual shape of these cycles, you see from red which cycles are in their main downswing phase. This is close to building a top, and this cycle is close to building a bottom, and then we'll switch to green. This cycle will also then switch to red once this top is reached. So that's how to read these dots here. Trading Queen. I hope that helps. So yeah, and I see your discussion, Andrea, you answered, and Santiago, you brought up that question. And I think you gave the answer already in the chat. So moving averages, doesn't matter which length or which calculation, if exponential or other moving average, they are always lagging indicators, and the lag depends on the length setting of these indicators. So they give you no, and at least they anyhow give you no clue what to expect in the future. So they might be confirming indicators. So you could use them to confirm if a cycle is active or not, but always after the fact. So moving averages could be used to confirm cycles or to filter out cycles, but they only give you an information when it already happened. So as a confirming indicator after the fact, that's good. The pure cycle analysis tries to identify the cycles and plot them into the future to give you a clue what might be possible due to that cycle happening in the future. And this is nothing where moving averages can help. So Santiago, it's a very good point. And the combination of using moving average to filter out specific cycles. So for example, if you research a little bit about centered moving averages, that's very interesting, because if you then use centered moving average and maybe crossing of different exponential moving average to confirm bottoms and tops, that I would recommend to do. And therefore that discussion was very interesting. Or Andrea, also thank you for already getting into that discussion in the chat. So Santiago, so it's an interesting topic in combination to cycle analysis. Yeah. So, Lean, let me, because I think you refer to the analysis we just did here live on the energy, and let me reread your question. The energy re-increases from the low of May onwards. The energy. Let me bring up the chart again, and then let's discuss your topic maybe also together. So I showed you these 4 cycles with the energy plot here at the bottom, right? So that's let me bring out your question. It might overlay here a little bit. So that's the chart with the energy cyclic plot, and your increases from May to the end. Yeah, so you may, if you are talking about the increase here, so it is increasing, so the amount of negative energy will be reduced. So the positive it's not positive in total. So the negative energy goes down until September, and then or even until end of the year, let's say here. But this just means that overall there's still a lot of cycles which are in their downward phase, that the overall that you see an increase in that curve here, but it still stays negative, just means that other cycles are starting to roll over at the end of the year, maybe to their positive phase again. That's why the overall amount of negative cyclic energy is reduced. You're right, it increases. But and what for me is really visually outstanding, you don't see this very often, that you have this huge jump of just a little bit of positive energy which is left here, and then a big negative jump. So the amount, if you just see the absolute amount, which just a little bit positive here, and then almost every cycle is becoming negative here. So that increase, at least that's not the way we should read it here. The negative energy from May to November is very high. At least that's how I read it. I mean, it's an experimental feature, I would call it. Yeah, it's not really a new one, but it's a different way to visualize that. Lean. Okay, Shahed, you are talking about genetic algorithms. Yes, I have published some concepts on using genetic algorithms in the combination of cycles, and then to use genetic algorithms to detect the dominant cycle. So not just using a spectrum, let genetic algorithms decide which cycles to pick. In the cycles engine we are using here, the genetic algorithms are not included yet. So this is a special subject, which is and to be honest, it's a special knowledge area on genetic algorithms. So this is just showing the results of the cycle analysis here, and then judging on your professional expertise which cycle to pick. The idea which you're referring to in the book is that I would say, I mean, if you don't have any clue which cycles to pick, you could use genetic algorithms, let them pick cycles, give this genetic algorithm a learning mechanism, so how to punish bad picks and how to have positive picks, and then these genes will survive over time. That's the principle of the genetic algorithms, which will then improve the way how the genetic algorithm picks cycles out of the spectrum. But then we need to dig into the how to teach a genetic algorithm how genes survive, or good ones survive and bad ones are sorted out, like in the process of evolution. So it's a very interesting subject. I would recommend dive into that. If you are familiar with cycles, that would be the consequence of just jumping on maybe the next step. Genetic algorithms have been here for a long time. I mean, it's now a subset of machine learning, artificial intelligence. So this is a subject we want to jump also onto in the foundation for the study of cycles. But for now and for today, we need to ensure that everyone understands how cycles are detected, how cycles are picked, what are the reasons to choose a cycle or not to choose a cycle, and how you can combine different cycles. We use financial data set to confirm or even to learn if we have been wrong. That's why we are here every week. Okay, I hope I gave you some hints on your questions. So thanks again for joining me. And for all other ones, please like, subscribe, leave a comment. That helps our channel to grow. And I hope to see you next week, same place, same time, Monday, Cycles TV. Let's do some cycle analysis. Until then, I wish you a very nice and happy week and hope to see you soon. Stay safe.